Because while you cannot avoid them entirely, what you can do, dramatically reduce how often they catch you off guard. And I'm going to show you exactly how. First of all, what is a fake out? I mean, to be honest, by this point, you guys should probably already know. If you've made it to this video, I'm sure you already know what a fake out is, but let's just be very certain. This is a beautiful scenario here in gold of a fake out. Price looked like it was rolling over, looked like we were finally gonna get a reversal, get some retracement, and psych. Nope. You thought short positions here. I'm sure you and everyone else and their mama thought short positions here, immediately went against you and took off aggressively in the opposite direction. This is a beautiful scenario of a fake out, but it is essentially just a failed breakout. That's what a fake out is. There's a lot of reasons why fake outs happen, but the key is to stop seeing fake outs as a mistake and start seeing them as normal behavior. That right there will give you an edge. If you can just be prepared for a fake out every time, it's not going to catch you off guard. You're going to know exactly what to do. The markets are manipulated. If you can think of the price as the markets of being this carnival game, it's not meant to help you succeed. It's not meant for everybody to win. It's not easy. It truly is like a carnival game. You're working with probabilities. You've got to know how to rig the system or rig the markets, or you've got to know how to play the game, essentially. So if you can get into a position already off the bat, anticipating a fake out, you're already going to be a little bit ahead. Now, why do fake outs happen? There's a lot of different reasons. It could be a news event. It could be volatility. It could be liquidity grabs. I know you guys love hearing that. So if you can just be aware that fake outs will happen and they happen often, and maybe not exactly particularly why they happen, but if you can understand that they do happen and stop blaming yourself and start building better filters, you're going to start seeing a massive change in your results, in your trading. So let's get into it. How do I filter high quality breaks? What tools can I put into place to help me avoid some of these fake outs or get faked out less often? So here are some added confirmations or some tools that I've got in my toolbox to help me before entering a trendline break, to prepare myself in case this is a fake out. So the first thing is a break and retest. So before entering a trade, if I am skeptical that this may possibly be a fake out, simply waiting for the price to break and then retest that line could be the very first filter that we can add to help us avoid some of these fake outs, or to help us stop being faked out so often, is simply just waiting for the break to happen and then waiting for price to touch the trend line from the other side and retest it. That could be the very first thing. You could start just implementing something as simple as that, and that right there alone in itself will help you avoid fake outs. Now the next thing is waiting for the candle to close. This one is the easiest to do, especially in the lower time frames. If the price continues to break your trend line or your level, and you can get the candle to close and still be on the other side of that break, then you're much less likely to be in a fake out, because more than likely it would have continued in the opposite direction. It would have already faked. Avoid fake outs. Now the next thing is waiting for the candle to close. This one is the easiest to do, especially in the lower time frames. If the price continues to break your trend line or your level, and you can get the candle to close and still be on the other side of that break, then you're much less likely to be in a fake out because the candle to close. And that filter, waiting a trade, if I am skeptical that this may possibly be a fake out, simply waiting for the price to break and then retest that line could be the very first filter that we can add to help us avoid some of these fake outs, or is a break and retest. So before entering a trade, if I am skeptical that this may possibly be a fake out, simply waiting for the price to break and then retest that line could be the very first filter that we can add to help us avoid some of these fake outs, or to help us stop being faked out so often, is simply just waiting for the break to happen and then waiting for price to touch the trend line from the other side and retest it. That could be the very first thing. You could start just implementing something as simple as that, and that right there alone in itself will help you avoid fake outs. Now the next thing is waiting for the candle to close. This one is the easiest to do, especially in the fake outs. Now the next thing is waiting for the candle to close. This one is the easiest to do, especially in the lower time frames. If the price continues to break your trend line or your level and you can get the candle to close and still be on the other side of that break, then you're much less likely to be in a fake out, because more than likely it would have continued in the opposite direction. It would have already faked you out. So if you can wait for the candle to close and still be on the other side of that break, then you are more than likely in the move and not caught up in the break. So no jumping in on wicks. You need to get a full-bodied candle to close through that level, past that break. This tells me that the break is much more intentional and we didn't just get wicked out or faked out here. And the next is confluences. Now this part's going to be likely in the move and not caught up in the break. So no jumping in on wicks. You need to get a full-bodied candle to close through that level, past that break. This tells me that the break is much more intentional and we didn't just get wicked out or faked out here. And the next is confluences. Now this part's going to be a candle to close through that level, past that break. This tells me that the break is much more intentional and we didn't just get wicked out or faked out here. And the next is confluences. Now this part's going to be dependent on your strategy and your system, but the added is this tells me that the break is much more intentional and we didn't just get wicked out or faked out here. And the next is confluences. Now this part's going to be dependent on your strategy and your system, but the added confluences that I like to incorporate before entering is how much data is behind this trend line. Has this trend line been respected for a higher amount of time? Is this trend line drawn on a higher time frame? Is this move supported by a 1 hour chart or a 1 hour trend line versus a trend line drawn on the 4 hour time frame? Or is this trend line been drawn on a monthly or a weekly? How much weight does this trend line hold, or how much weight does this break hold? Now the next thing could be, if you're a day trader, it could be the time of day that you're trading. Are you trading during lunch hours? Are you more than likely about to be tossed into consolidation and faked out in either direction? So making sure that you're trading during more volatile hours instead of consolidation or price is moving sideways through your lines where it could very well just break it and then come right back up. So just making sure that you've got some added confirmations or confluences to help you feel more confident about this position or about this break that's going to happen. It could be key levels. It could be support and resistance, waiting for your trend lines to be broken, or confluences to help you feel more confident about this position or about this break that's going to happen. It could be key levels. It could be support and resistance, waiting for your trend lines to be broken. How much data is behind the trend lines? Do they hold much weight? Are they drawn on higher time frames? What time of the day is it? So just making sure that you put all of these things into place before jumping in on that break, that alone in itself can help. So it's just added confluences, making sure that all the stars align, all of these things are playing a role before entering this position. So the confluences part is going to be a little bit more vague and subjective depending on the strategy that you trade. And then the last thing is going to be double confirmation. Double. So not only do we need a break of a trend line, but we also need a break of support and resistance, or support or resistance, whichever one. And that's showing us that we're no longer consolidating. We have been able to break out of this consolidation, out of these highs that it hasn't been able to break out of, or these lows. So we get double confirmation here, allowing price to not only break through a trend line, but also break through an area of support and resistance. So these are 4 things here that can help filter out some of the fake outs. You can incorporate all of these, you can incorporate some of these, but I can guarantee if you incorporate any of these, the odds will be much more in your favor of avoiding fake outs than getting caught in every single one, taking every single break. Now, even with all of these tools, fake outs are still going to happen, believe it or not. Even with all of these tools in our toolbox to help us avoid them, they're still going to happen. Now, when they do, how do I respond? When I'm caught in a fake out, even though I've used these tools in my toolbox, how do I respond and how do I react? I can tell you what I don't do. I don't revenge trade. What I do is I will log this trade. I'll make sure that it is journaled in my TradeZella. Plug, if you don't know what TradeZella is. It is a platform that allows you to track and journal your trades to see what these fake outs have in common. To see, I put these tools into place and I still was presented with a fake out, but when I add this tool, I'm less likely to be caught in a fake out. So it's a great place for you to help analyze and track your stats and your data and your setups and your tools in your toolbox to help you avoid these fake outs. If you've never used TradeZella before, I have a code that is Tori10 for 10% off of the monthly, or if you're looking to go all in for the year, if you use code Tori20, it'll give you 20% off for the entire year subscription. But what I do is I will simply log that trade, I will journal it, I will note what failed, why it didn't work, and then move on. We're on to the next trade. So since my risk was already predetermined and preset before I even entered this trade, the damage was limited. This loss was considered a fee. It was small. It was mitigated. And sometimes fake outs create new opportunities. Now it is showing you that we're actually gathering momentum and going in the opposite direction. So if you can remove some of the resentment also towards the fake out, it will allow you to move on and take the next setup, which very well could be in the opposite direction. So it's truly just about remaining neutral. So let's recap here. Are fake outs avoidable? No, they're not. You cannot avoid fake outs entirely. It's just not possible. But now, can you reduce how often they affect you? And the answer is yes, absolutely. Use filters, wait for confirmation, and accept that sometimes the markets are just playing games with you.
5 minute time frame. I moved from the 5 minute to the 1 hour, and the 1 hour to the 4 hour time frame. Trading Apex, I need to be day trading. We have to close our trades. Now, you don't have to. You can still be that 4 hour trader. Close your trade before 4:59 p.m. Eastern and then reopen. But I'm going to say I'm excited about the 5 minute time frame, and this is something that I want to commit to. So I'm going all in. I don't want to, have positions open on the 4 hour time frame, close them, then reopen. I want to place my trades in that 5 minute time frame. A lot of my students trade the 5 minute time frame, and my community does. So let's get all into it. Let's go right on in, all back in, boop, 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 boop. Now, why would I even want to consider going back to the 5 minute time frame? The first thing is, oh my gosh, when you can close that trade and be done with it, not have to think about it anymore. That's enticing, is it not? That sounds great to free up that mental space that you have been drained with the 4 hour time frame where you go to sleep, but guess what? You wake up, you're still in a trade. You go to sleep the next day, you wake up, you're still in a trade. Imagine how exhausting that is. 5 minute time frame, you close that trade, you are done. Close the computer, you're done. Don't even think about it anymore. So that is one thing that I do miss about the 5 minute time frame, is being able to close that trade and truly separate. It's not in the back of your mind, it's not in the back of your head thinking, am I making money? Am I losing money right now? For days on end. No, you're in that 5 minute time frame, you trade during your session, and then you're done. Spitting facts over here. Another reason why I'm excited to go back to the 5 minute time frame is that instant gratification. You get that profit and loss right then and there. There's a lot more volatility. What price does within the 5 minute time frame versus the 4 hour time frame is just so different. They're completely different traders. They're seeing completely different things. That 4 hour time frame, you're looking at one candle just move up and down in 4 hours versus the 5 minute time frame. They get to see so much. You get to kind of, and actually look, we've got the charts open right here. This 4 hour time frame, we're looking at one candle. One candle has 4 hours worth of price movement. Let's go ahead and move to the 5 minute time frame. Look how different this looks. There's just so much more going on. We can capitalize on all of this in between. So how cool? The 4 hour trader, they never got to see any of this. They had no idea this was going on. They saw one candle moving up and down a little bit. The 5 minute trader gets to capitalize on all of these movements. Okay, there's also drawbacks to the 5 minute time frame, and that is essentially you're making a lot more decisions in a shorter amount of time. So there's a little bit more anxiety involved, and that could lead to emotional trading. Also be aware of the volatility involved in the 5 minute time frame. Things could look like they're making rapid movements or aggressive moves in the 5 minute time frame when really we're just getting, maybe it's a news day, you're getting a sporadic move here, whereas okay, maybe we're on the higher time frames. Nothing actually crazy is happening. Now, it also requires a little bit more skill. Now, it seems like that's the place where you start. You start in the 5 minute time frame. And I do recommend people starting in the 5 minute time frame because it is a little bit tricky. If you start in that 4 hour time frame, things are comfortable. You're not making very many decisions. You're holding your trades for a few days. It feels very relaxed and low paced. But that 5 minute time frame requires your attention at all times. So it does require more skill. So that's just something I recommend people start in the 5 minute time frame. Get used to that higher volatility, making quick decisions in a short amount of time, and seeing much more noise, which, in the higher time frames, you're not seeing all that. So it does require more skill, but I recommend mastering that first before moving up time frames. So now let's play some trades. I haven't placed a 5 minute trade, dude, in I think over a year. Maybe it's been 6 months, but let's do it. Here we go. Right now I'm looking at the NQ. I don't want to place a trade on the NQ in the 5 minute. That looks ugly. Let's go to crude oil maybe? No. Let's go to gold. Okay, we can trade gold. It's looking a little volatile. We got some movement here. Let me just take a peek at platinum and silver and copper. All right, dude, we're doing it. I'm in a live account right now. Let's see if I can find a setup. Okay, we need to do some chart analysis first. Let's start on our higher time frames and then work our way down. Monthly time frame. I can't see my computer screen. I'm gonna have to scoot it just a little bit. For you guys that are watching, I am going to scoot my computer screen so that it doesn't look abrupt. I just need to be able to see it better. Okay. All right, so we're in the monthly time frame. It's looking good. Let's delete some of our lines. If you guys know, I'm a trend line trader. I'm making decisions based on lines on a chart, lines on a screen. This is ours. Okay, so we're on the monthly. Let's go down to the weekly. Weekly's looking good. Let's go down to the daily. Daily's looking good. Let's come in with some steeper lines here. I love that you guys get to just see this beautifully simple strategy, which is not easy, but very simple. Simple to apply. All right, 4 hour time frame. Let's come in some more. So in the 4 hour, in the daily, in the weekly, copper is up. Now let's go to a 1 hour. Ooh, we're getting down and dirty here, going to the 1 hour. Okay, I would have gotten signals to go short in the 1 hour, but we're not doing the 1 hour today. We're going to the 5 minute time frame. So we're in the 1 hour. Let's come down even closer. All right, we won't go straight to the 5 minute. Let's look at the 30, then the 15, then we'll go to the 5. 30 minute time frame. I need to come in with some downward trend lines. Boom, boom. Let's change the color to red. Love it. We need to come in even steeper. Okay, I'm gonna come in with my steepest line here on the 30 minute time frame. I'm gonna adjust this to this last pullback, and let's look in the 5, see if we can find an opportunity to go short, that's the only move I see here. So 5 minute time frame, let's take a short position. We're in a live account, we're doing it. You guys all around me, you seeing this? We're doing it. Or maybe we'll come in light though. We'll come in light in position size. We're gonna create a new order. Let's do one. I haven't traded one contract in so long. We're taking a sell position, market order, we're in. We're in a short position, real live money right now. Let's pull up the profit and loss. Wow, I haven't done this in so long. This is exciting. Am I making money or am I losing money? and so long. We're taking a sell though. Well, we'll come in light in position size. We're going to create a new order. Let's do one. I haven't traded one contract in so long. We're taking a sell position, market order. We're in a short position, real live money right now. Let's pull up the profit and loss. Wow, I haven't done this in so long. This is exciting. Am I making money or am I losing money? Let me pull up the profit and loss so we can see dollar amounts here. I am losing 85 cents. Wow, this is a little more anticlimactic than I thought it would be. Maybe I need to go in heavier. I'd be losing $85. That'd be a little bit. Oh, okay, we're up 12 bucks. 12 buckaroos, 12 doll hairs. This is fun. Okay, let me at least walk you through the strategy as we're waiting for some of these 5-minute candles to populate, which I don't know if we're gonna wait that long, but maybe we will. We'll see. Let's see. Okay, first of all, what am I expecting in this trade? Why am I even in a short position? I am in a short position right now because price has crossed this upward green line. It has shown me that we may not be trending upward anymore. We may be trending down. Now, how long am I gonna stay in this trade? How long am I willing to give this trade? Where am I willing to take a loss? It's gonna be on the other side of this downward line. So if price can show me that it showed me that it's no longer trending up, so I like that. We're taking short positions. If it can show me that it's no longer trending down either, then I'm thinking of closing this short position. So let's see where a stop loss would go. Let's come in a little bit closer. The stop loss is always going to go on the other side of the opposing trend line that got crossed. So the line that got crossed is the upward green line. Love that for me. We're in short positions. It's going to go on the other side of the opposing trend line. So we took short positions because it crossed an upward line. We want the stop loss to go on the other side of the downward line. Do you see how smart I sound? Like, I'm so confident in this because this is just what I do. I'm talking to you guys. All right, so short positions here. Let's take our stop loss. We're going to have to put our position size on the screen so that we can see how much we're making, if we need to put in a stop loss or a take profit. Here we go. We're going to go to our settings. We're going to go to trading here and turn the positions on. And let's see dollar amounts. Money. Okay, there we go. I'm down 12 bucks right now. It's pulled back. Now here we can add a stop loss. We're going to take that stop loss and drag it to the other side of the safety line. So I'm willing to lose $137 in this trade. Now it also went ahead and moved my take profit as well. I don't trade with a take profit. You guys know that. I am essentially trying to stay in the trend for as long as possible. So if this trend does continue down, I don't know how long it's going to trend down for. I don't know where that take profit should be. I'm essentially going to let the price tell me when to take my profit. Now, when trading an Apex account, we want to take profit as much as we possibly can and as soon as we possibly can. So I want this stop to trail along my profit. So as soon as profit starts turning around, I want to take that. So let's see if we can get as much of this profit as we can in this 5-minute time frame. Now, this trade may take longer, so you guys may not be able to see this whole trade play out since we're gonna have to sit here for at least 15 minutes just to see 3 candles, and I don't know if we want to do that. But this was essentially me getting into a trade. So this is the first time I've placed a trade in the 5-minute time frame. That's exciting. It's fun. I'm getting used to it. I'll be going full force in the 5-minute time frame. We're down 50 bucks already. Here we go. Are we coming up? Do I need to go ahead and take this loss here? But this is essentially kind of walking you guys through my strategy in the lower time frames. When you're in lower time frames like the 5-minute time frame, you're gonna be making a lot more decisions as well. So this trade may not work out within 5 to 10 minutes. I may need to reverse my position and think long positions very soon here. So there's just a lot more decisions to be made in those lower time frames. You just get so much more noise, so much more volatility. So I'm trying to find out which one of these trends is actually going to follow along. I want to catch something like this. This was a beautiful move down, and right now we very well could be in consolidation. It is 8 p.m. at night, and I'm trading copper, so we might not get price to go anywhere. But essentially, I am trying to find which trend is true, which trend is actually going to follow along. Right now we're down 37 bucks. So this is fun. Maybe I'll try the 1 minute next because this just isn't doing it for me.